I'm going to try to bring up the energy a little bit, but I have a very important topic to talk about today. I learned a very hard lesson today. And I'm really going to have to, go meditate and sit with it. Okay, sorry. It's very frustrating, man. It's just very frustrating, especially when you work so hard at something. You start to see some results, and then it just gets taken away from you by yourself. Very frustrating. But today we're going to be talking about... Oh, sorry. Let me put my face back on. About just earlier this morning, just Friday in general for October 31st. So the overall lesson that I learned today was about greed and not getting greedy. Okay, taking your wins and exiting the market. So again, right, taking our wins and leaving. It's so tough to talk about. So I was up, took beautiful trades. First of all, took a buy position within here, somewhere within this area, had a large enough stop loss to compensate for price coming down. And then we had seen price move to upside. Cool. We capitalized and we were up over like 3.7K from in this area. And then we took a beautiful, we were up like 2. And then we took a beautiful sell position at this high. Like it literally could not have been more perfect. And then price started to short. And then we exited the position because I thought maybe price could come back up, fill some type of inverse fair value gap, and then continue lower. It's not what happened. We obviously continued way lower. And just off of this trade, I would have hit my goal for the day, which was 10K, which is crazy to say. But yeah, with these 100K accounts, it is very easy to, reach those numbers. And yeah, man, I mean, talk about like disheartening. It's so tough to even talk about and think about. But it's just like a bad breakup. You just have to get over it and on to the next. Learn about yourself, learn how you can be better for the next trade, and then just get on to the next trade. So yeah, again, the overall lesson was just greed, not getting greedy, taking profits when you're in profit, especially if you're counter trend trading or if you're just seeking opportunities within the markets. But yeah, I mean, when we took that, we were up like 3.7, and then I took a very, first of all, the first trade that I took was a bad one, and then the second one I took was a beautiful one, and we were up over 5. So yeah, we were literally up 5.5 in total equity on the account when price came up to here. One thing though that I would say is not taking more than one entry per trade idea. Okay, so one entry / execution. So one entry, one execution per trade idea. Yeah, because I entered in 3 different entries in this one area. So again, being more specific with entries as well, right? So more specific, or you could say, more selective. With our entries. And then, yeah, one thing that I did that I was doing exceedingly well, okay? One thing that I was doing exceedingly well was I'm just going to write this on the back because these were like good takeaways from the day or great takeaways. And that was scaling into the positions. So scaling into the positions, starting at the minimum, which was one lot, and then working our way up to two and then three lots. It was, again, very, very, very um, good way of trading these TopStep accounts, because we have, as we know, we could enter in three different lots, or sorry, we could have three lots. Um, and when price goes into our into profits for us, we could simply just look to enter in more, move our stop loss up, enter more, move our stop loss up, back and forth, back and forth, back and forth. So yeah, I mean, overall, um, just taking our wins and leaving the market, because we were up, and we were up big time, and we could have came into Monday a lot better mentally, and we would have been up in profit. So yeah, I mean, it is what it is. So um, yeah, and then something else that I would say is, like today is Friday, and we know that Friday usually moves in one direction, so there won't be like a big like reversal happening or anything. And I was trying to catch the reversal on the day, which was a buy position, noticing, like what are we doing overall? Well, we're selling off. So, that could have definitely been a lot better. Um, and one thing also, I think that would be like, yes, having a bias would be very easy. Um, it's just trading with the trend, guys. Like, noticing what trend we're on, not thinking, okay, well, I think that we're just going to reverse. Like, what? No. Look at what the trend is telling us that price is selling. The trend is telling us that price is shorting. Stop barking. Holy fuck. Get in your crate. Get in your crate. Right there. Get in your crate. Trying to keep my cool. Okay. But yeah, I mean, right, we're seeing that price is shorting. Why would we be looking for like longs, right? Overall, um, yeah, that it makes sense, right? So, trading. Frankie, stop. So again, just trading with the trend and simply following the trends, right? That's all we need to do. Nothing more, nothing less. But yeah, I mean, my strategy was working. I was finding beautiful entries. Like, let's talk about this one real quick. So this one was cool. This one was cool as well. It was an inverse fair value gap. Price had inverted right over here, where we came down into this and we reacted. We reacted, like reacted to this area, and then price pushed. But like noticing over here, what do we have? Well, right here we have this fair value gap, or this fair value gap on the 5 minute, and what does price do? It pushes through. So I mean, and again, we're above a key level, right? We're in that inverse fair value gap, or we inversed a fair value. We inversed a fair value gap, targeting it. Again, it just shows that structure is starting to change. If we look at the 1 minute time frame, we can see price started to push. Boom. This would be the market structure shift, and then we go back to the 1 hour. And then we could just see how price starts boom selling off, and yeah, so that was like a really good entry. Again, finding that inverse fair value gap, And then like these ones, they weren't bad trade ideas, but again, I wasn't being patient enough. I was quick to enter, quick to enter, quick to enter. So like as soon as I saw this first one, I was entering. But I should have just been a little bit more diligent, seeing that price was, rejecting this, so it wasn't an inverse fair value gap, and instead we were starting to short. So this is just a fair value gap. Price came up into it, and then what happened? We start pushing back down. Okay, so just being aware of that, seeing that, and being very patient because we are at a key level, but there's not much else going on, and then price starts to be very accumulative within this area. So again, we just have to be patient and wait to see what price is really trying to do within this area, which was right here. So we only see after this liquidity sweep right here, then we see an inverse fair value gap. This was why I had entered in this position, and it was actually a beautiful entry. So our inverse fair value gap, or on the micro time frame I call it, we're seeing liquidity sweep plus an inverse fair value gap, right? And in this case, we were below a key level as well. So there's so many different reasons for this entry working, and then price, it shifts the structure. So you can see the 1 minute lower highs, lower lows. Again, this was a lower high. And then what does price do? Pushes through this area. So then we start pushing, and then we come up into a fair value gap, which was on the 15 minute. So we have this 15 minute right here. Boom, boom. Going to, well, yeah, we could delete this one now. So again, fair value gap. So boom to boom. And then price comes up, shorts off the initial part of this. Boom, boom. Wicks the highs. So if you go down to 1 minute time frame, we can see that price sweeps out these highs. The very small wick, very, very small wick. And then what happens? Well, we start to inverse. Right, we start to target this 3 minute inverse right here. So boom, that's the inverse. Frankie! So this is the inverse. Again, liquidity sweep, and then an inverse. And we're in a higher time frame point of interest area. So that this just adds, onto the confluence list. And yeah, so then we have price start to inverse through this area. And this would have simply been our entry. Once we start to see boom, we could enter like this, stop loss above, and then just wait to see what price does. And then we start taking out liquidity, right? We could aim for this as our, our bottom side liquidity. We start pushing, and then what does price do? It starts to come back up into this area like a break retest, and then continues lower. And again, that was literally it. So go back to a 5 minute. Again, price pushing down, shorting, shorts off this area, pushes lower, right? So many different reasons for looking for shorts on the day, especially after you see, something form on London sessions telling us that price could potentially, reverse. And it wasn't a bad idea to have, also let's see what we could see for a market structure shift. So highs, right? Higher lows, higher highs. And then what is this? Boom. So again, higher high, right? Higher lows. You can even say this is a higher low. But, it really doesn't matter. Let's see, actually, because it does kind of matter. But, yeah, in this case, boom, that's it. Boom. Price comes right above that market structure shift. Again, right? So after we, come down into it, we retest it, and then boom, we just start shorting right back down to it. This would have been such a great trade because this would have been really quick. And then yeah, price just continues lower, and I kept having an idea that price would, eventually give us some type of reaction. And yeah, we didn't get that reaction. So it happens. It happens. Again, we lost 2K on the day, so we're down 2K on the account in total, but we can definitely come back. I mean, we could easily take, one lot and then, enter in more positions on Monday and hope to see, big profits. So, but yeah, let's then look at this order block. So now we had this 1, 2, 3 different candles, which is cool and that works, but also we have this, and then we also, do this. I don't want that initially. I want to save it like this. Boom, boom. Order block. Boom, boom. Yeah. So then, and you can see like right now, what are we seeing? Well, we can see this last down candle for the up move. This is a lower time frame order block, or what we call is it now a breaker block. So you expect price to push above. We have this lower high area right here. So market structure should shift off of this area. We should start pushing, and look at the lower time frame. Lower time frame, we had a liquidity sweep happen. So like notice how like a liquidity sweep will happen like right in like initially, like boom, right? And then as soon as we have that liquidity sweep, and notice it is also in a point of interest area, but then we have price start to shift that structure. So we have some type of point of interest area and then shift in structure. Not seeing anything on the 3. I'm not seeing anything on the 5-minute. So yeah, it was really just that 1 minute breaker block. Price comes into that midpoint and then reverses, pushing higher. So now I bet that we, anywhere below this market structure shift would really just be the best entry. But let's say we take a trade like this, and that would be our stop loss, and we would simply look for long positions. And yeah, that would literally be it. I mean, simple as that. So I could bet, I'll put $1,000 that price would start to reverse off of this area to the upside. We tapped back into this 4-hour point of interest area. You can see that. Now we do have, this doesn't look too promising. This is very bearish, but if it is a strong area, then it could definitely reverse, and I definitely think that price is going to reverse out of this area to the upside. So yeah, but we're just gonna have to come back strong for November. That's it. Cause man was that tough loss on the day, being up so much and then coming back. But I mean, it was a big confidence booster. So I'm proud of myself nonetheless. Not so proud about my greediness, but yeah, I mean, it happens. I'm more mad at myself that, not that I was greedy, not that I was revenge trading, because I wasn't revenge trading. What I was doing was, and maybe I'm not being truthful with myself, but I really feel that all the trades that I took were very, very, very good. I had a couple of entries that were revenge trades, like right off rip, because I had the idea that price would move off the area, and so then I entered in a couple more lot sizes than I should have within that point of interest area in itself. But other than that, I really do feel like I feel like I did a really good job. Again, I followed my plan, right? It's like let me write it on the back. And I'm more just mad at myself that I didn't get the result that I intended. But I mean, like, it's trading. Like, you're not always, more than likely you're gonna fucking lose. So yeah, I mean, it is what it is. But I mean, we still got money in the account. We could still mess around. So I feel good. To be honest, I do feel good, and I need to start feeling good. I need to start recognizing what I did right and how good the day was, how profitable I was, um, and yeah. We took 22 trades on the day, by the way. Crazy. And mind you, 41% of them actually hit, which is so cool to think about. So either that they hit or they hit break even. Um, yeah, and I think that, finding clean inverse fair value gaps or, point of interest areas on LTF is very key here. But again, I mean, on that lower time frame, right? On our micro time frame, we should be seeing a liquidity sweep plus some type of POI being respected in slash near a higher time frame POI, higher time frame, lower time frame POI. And like this right here, look, boom, price came right back down to it. Boom, we're buying. This thing should start shooting up to the upside. But yeah, guys, I'm out. Peace, love y'all. Bye.